I think the local government is actually, trying to sort of maintain its cash flow, because this year the land sales, proceeds from land sales is down another 20-30%. So I think many of the poorer local governments is, finding it very difficult to make ends meet. So as a result, some of the governments local governments actually finding it hard to pay salaries to public servants, for example, and also have to resort to, other means such as, fines and penalties to get extra incomes. So I think it's very disruptive to the local economy, right? So for example, some local government could put unreasonable fine on the local companies, who may have conducted illicit business in the past. So things like that. So I would say that the 6 trillion over the next 3 years, just to help alleviate the debt burden for the local government, would help to a certain extent. I think the official figure for the hidden debt on the local government's balance sheet is about just under 15 trillion yuan. But I think in actual fact, if you count in LGFV, the local government financing vehicle, I think the number is substantially larger. So I think I would say 6 trillion is helpful to a certain extent. I think it's probably going to help local government pay the salary. But I think in terms of resolving the situation, the local government debt situation, and also the property market situation is far from being over.
All right, so takeaway from what you're saying is not enough more help is needed. Understood. Hong Kong, very quickly before you go, there was a time when EM high yield, in terms of weighting, was dominated by Chinese high yield, right, including for property developers. Obviously, that's not the case now. It hasn't been for some time. But we've been hearing increasingly from a number of guests the last few weeks that Chinese property developer high yield bonds, offshore, dollar paper, not onshore, is looking increasingly attractive to them. Is it to you?
It really depends what they do next in 2025. I think if they can, issue special purpose bonds, for example, and then use these proceeds to buy up land reserve and also the inventories that is outstanding on the market, that's going to help big time. I think there at least 400 million square meters unsold inventory standing in the market. That is about 1 year's worth of supply. And also, if you counting the second-hand housing and also all the buildings are being built, obviously you have inventory that is probably about 3 years of sales right now. So I think a very substantial, forceful policy initiative needs to come out next year. I think what we've seen in the past couple of weeks of the 12 trillion yuan package is mostly for this year, right? So and for the next couple of years. But for 2025, we need to see a substantial expansion of the fiscal budget deficit. Maybe it can be done through ultra-long dated government bonds and also some special purpose bonds to replenish the physical revenue so that we can take the total spending upward to 12 trillion and up to resolve the situation. So I think people who are betting on the high-yield Chinese bonds, US dollar bonds, is really betting on a very substantial policy coming out for next year.